the CFO of our company. Hi, Kunal.
Hi, good evening everyone and welcome to this post-budget seminar.
Right. So now let us take through a small presentation. We will also discuss along the presentation about the provisions in the budget. Yeah, so the macroeconomic variables, economy is expected to grow at 7% as per the in FY23. Economic survey said that we could grow at 6.5% next year. Then our economy has grown from 10th to 5th largest. Fiscal deficit is now projected at 5.9% versus 6.4% in FY23. Market borrowings are also estimated at in line with what market was expecting. Agriculture and allied sector में free food grains scheme will continue. 2 lakhs crore will be spent on the PM Garib Kalyan Yojana. Agricultural credit target has been expanded to 20 lakh crores. Then socio-economic policies, a lot of government is looking to implement many programs for green growth across various economic sectors. Investment limit is
on the slide. If we see, I think so, Deepak, what we can see is capex 33% rise is one of the major highlights, and I think so it will have a major impact on the overall robustness that we have. It will also probably try and demonstrate that this is a growth budget and will have a very positive impact on the overall ecosystem. And this also kind of demonstrates that India is one of the largest growing economy. What is your take on that? I strongly feel that that is something which is the biggest highlight of this whole budget.
Right. So government capex of 10 lakh crores and railway capex, which has also increased. These two are the highlights on the positive side, which will sort of lead to a trickle down effect in terms of private capex and also lead to a generation of income across the board. So yes, this is a very welcome provision in the budget.
And it's a 33% hike, and you rightly said that even the railway budget has been the highest ever. So this is also going to boost consumption, which is going to create a lot of purchasing power in the hands of Indian ecosystem. So from a market perspective as well, this is a very welcome move because there will be a lot of work with all the companies that we see. Having done this, still FM has been able to have and curtail the overall fiscal deficit to 5.9% on the overall roadmap of going to 4.5% or below 4.5% in next couple of years. So that's the major commendable thing, and I believe that's the biggest positive of the budget, and that lays down the foundation of finance minister doing a very right move.
Correct. So this will lead to the capital goods or engineering companies doing well over the next year or so, and this could be one of the sectors which can benefit out of the budget.
Absolutely.
Going to the power may again some 35,000 crores capital investment towards energy transition. So India wants to move from carbon based fuels to renewable fuels. So that is the spend towards it. And a lot of emphasis on green hydrogen mission continues in this budget as well, in addition to whatever was said in the previous budgets. Digital. Now, digital is another thing which they have repeatedly emphasized on. We have reached quite good milestones over the digital journey so far, and going forward also. Digital transactions have seen 76% increase in terms of volume and 91% in terms of value over the last year. So India has been among the forefront in using digital digital infrastructure in the payment system. So I think we may be the best among all countries developed and emerging in terms of adoption of digital. and we want to continue on that path.
In fact, there are a lot of new areas that have been introduced in the budget. And if you see, there are 3 centers of excellence to be created for artificial intelligence, and there is an outlay of expense for it for Make AI in India, Make AI for India. And that is something which is going to be one of the futuristic sectors. So this futuristic approach in the budget is something also very applaudable.
Right. Now, tax and administrative reforms. Kunal, you want to take this point?
So this has been one of the major highlights again of the budget, and there were changes in personal income tax, which is what everybody was looking for. And as we see, there were expected certain populist measures that we had highlighted earlier also. And if you see up to 7 lakh of income tax slab, there is zero taxation under the new regime. While the old regime continues, the new regime has become a default regime. And then the highest tax slab, also 30% on an income above rupees 15 lakh, is something wherein there has been certain reduction in surcharge. So surcharge has been brought down from 35% to 37% to 25%. So that effectively reduces the tax slab from 42.7% to 39%. So all the taxpayer in all the tax bracket has been able to benefit out of this, including there has been a increase in deduction that can be claimed under the income tax up to an amount of rupees 3 lakhs. So there has been an overall view in terms of the personal taxation, and then each, be it middle class, be it higher income groups, everybody has something to cheer. Having said that, there was an apprehension that a long-term capital gain tax may undergo certain change, and in fact, capital gains, including short-term capital gain tax, also may see some kind of a change, and there was an apprehension to increase it, which was not increased. And therefore, if we see in the middle hours, immediately after the budget, we saw a very good rise in market as well, and markets went really high, really accepting the overall budget and the verdict that was given. We did not even see any increase in corporate income tax as well, and it has been kept as it is. So with that, the finance minister has still been able to kind of increase the overall tax collection by 11% from 20 lakh crore to about 23 lakh crore, with an overall collection expected to be 27 lakh crores. So overall, minor changes in indirect tax, sector specific changes, well identified to boost certain sectors in indirect tax, but no overall tax change. Still having 11% increase in tax collection demonstrates the growth that is expected, which is in lines with 10.5% of the nominal GDP increase that is pegged at. So that is something on tax side, a very, very well packaged, also a little bit populist measures, and something for everybody to cheer at a personal level is something that we can summarize it as.
But these reliefs are available to you only if you shift to the new tax regime, right?
That is correct. See, this relief is only if we shift to new tax regime. But let me also say that the old tax regime has only been kept so that people don't feel that they have been mandated to shift to new regime, if at all that is detrimental to them. But given that there are so many soaps that are given in new tax regime, including the slabs, everything, it is also kind of said that most of the people will now shift to new tax regime, and there is nothing much that people will actually feel to kind of continue in the old tax regime. So historically, if you must have seen, generally the tax slabs would be kind of scrapped of old regime, and there would be no old regime and new regime. This is just that people still have an option, and so that there is no backlash. So this demonstrates intention of government, wherein they have kind of left an option on the taxpayer what they need to do, and therefore they have made the new tax regime as a default tax regime.
Yeah. So if you sit and make calculation of old regime and new regime, maybe probably up to a certain income limit, the old regime will still be favorable. And above a certain limit, I think the new regime will become favorable, probably. But the old regime,
Yeah,
you will have to do savings and investments.
yeah, that is correct. But also, if you see, the difference will be very minor, or in most of the cases, the difference will be new tax regime only because the slab has been moved much higher in low regime, wherein up to 7 lakhs it is no taxable. And there is no tax. So that is something which is kind of very, very welcome. And I think so, it makes complete sense for most of the people to shift to new tax regime.
Yeah, if not this year, maybe next year, with some additional incentives, people will shift to the new tax regime. There is
Yeah,
now, but because it is now the default mode, people will have to apply their mind every year as to whether the new is more beneficial or old is more beneficial. If they don't make that choice of old, then it will automatically go into the new regime, right?
absolutely. So that's correct. So most of the top end tax players will only be in the new tax regime because that is something that will be more favorable for them. It is only that if there is somebody in the lower tax order, then they may want to also evaluate the old tax regime as well.
Right. So
Also, there
next,
has been certain selective changes in the tax on the personal income tax side, and like the capital gains has been brought to tax above an amount of rupees 10 crores. There was also an apprehension that there may be wealth tax, inheritance tax that may come in this budget, but luckily that has not been introduced. So it's an apprehension every year, but this time also it was
yeah,
making a lot of talks. So all of
correct.
that has been a very welcome move.
And this being the last budget before the election, I think the stern or the harsh measures will come only in the first budget post the new government, I suppose.
You are right, that has been the trend, but I would also say that government has not really been taken a backseat in terms of taking some of the non-populist measures, including like they have increased some of the taxes on cigarettes. So, and also if you see, they have kind of removed all the arbitrage, like the insurance over
Correct.
and above these 5 lakh rupees has been
Yeah,
made taxable as EET rather than EEE. So that is a major shift because a lot of endowment policies and other policies above a certain value. So the lower rank of the people have been left out of it from taxability, but from a higher end perspective, they've made it tax. Even if you see market linked debentures, okay,
right.
were earlier able to be classified as an equity instrument and hence long-term capital gains of equity was applicable, which was at a
For 1 year.
lower rate than a debt instrument. So
Correct.
even that has been categorized as debt, and therefore all the arbitrage has been taken out, which is, I think, so a fair move. It's giving a level playing field, but
Correct.
that's
Correct. So,
something one will have to be watch out for.
yeah, it's a cat and mouse game. Basically, taxpayers would want to avoid tax, and government will like to plug the loopholes.
Absolutely.
Right. Now, so this is the budget at a glance. The tax revenues have been estimated to grow GST at about 12% versus 22% last year. Corporation tax at 10.5% versus 17.2% last year. Personal tax at 10.5% versus 17.4% last year. Customs at 11% versus 5.5% last year. So customs may be a little challenging because of the slowdown expectations. Corporation tax, personal tax, there should not be an issue. But at the same time, this also gives you an indication that the income growth across the economy may be slower this in FY24 compared to FY23. So this may have an impact on the corporate earnings estimates also. So this we'll have to keep it in mind. Apart from that, I think divestment receipts are expected to be 51,000 crores versus 50,000 crores last year. Subsidies have been cut very drastically by about 28%. Food subsidy is expected to be 1.97 lakh crores versus 2.87 lakh crores last year, and fertilizer subsidy at 1.75 lakh crore versus 2.25 lakh crore last year. So this cut in subsidy also is a welcome move as far as the fiscal situation is concerned, but it may create some impact on the consumption trends in the rural economy. But the economy so far seems to be in a good shape, so we may be able to overcome that kind of situation of slowdown. The fiscal deficit number 5.9%. Kunal, what do you think? We are on the right path?
I think so. That's very commendable, is what I believe. And then fiscal deficits, hearing it below 6% was kind of a delight to hear as well. If we are able to achieve it, it will demonstrate that economically we are going very well, and we are able to tax in right areas, not hamper growth, and at the same time make sure that the long-term initiatives of reduction in fiscal deficit, go green, lesser import substitution, higher exports, make in India is fostered very well. Decisive growth path is what I would say.
Right. And from over 9% fiscal deficit in FY21, we are now to 6%, which is very commendable, as you said. And if we are able to stick to 4.5% by FY26, I think all the credit rating agencies will be very happy with the way we have tackled our fiscal situation.
Absolutely.
Then, yeah. So market borrowing number also have come in line with the overall expectations. So what do you think, Kunal, will be the impact on the GSEC yields? You think we have seen the top in the near term, or we may see a little higher yields in the near term before we see a top?
So let me put it a little more contextually, because you touched not only GSEC yields, it's a very trendy topic, and it is about all the yields and interest rates. So how will interest rates behave, and therefore how will GSEC yields behave is what is the question. So if you see over last few months, especially last 6 to 8 months, RBI, and therefore all on back of all the global countries who have been hiking rate, and very aggressively they have been hiking rate, we have seen around 250 to 300 basis point rise in India in the interest rates. And therefore, GSEC yields have moved from 550 basis points, this is 5.5% per annum, to 7.3%, 7.35% per annum as we speak. I think so that has been a substantial rise in a very short term. And then any further aggressive moves by RBI or global economies as well, especially Fed, in terms of the aggressive interest rate and liquidity tightening, will definitely have a direct impact on GSEC yields going up. However, I don't believe it will be as aggressive in this year, because already a substantial has been done. So I think so there has to be some cool off, and the yields in this year, especially the first half, should remain in this range only. Maximum about 25 bips up from here is what I am seeing. But in the long run, if you see maybe over a period of 1.5 to 2 years, I see GSEC yields softening in lines with all the interest rates also softening. And therefore, if we see the impact on the markets as well, we should say that the first half may really have to face the toughest part of the overall global turmoil that we are seeing, the global recession fears that we are undergoing. It will definitely have an impact on India as well, and therefore the first half looks little challenging, and we will have to sustain, to be very honest. However, in the second half, the markets will start perceiving this interest rate cycle softening, or maybe not necessarily increasing, and therefore the growth again building up. And therefore, from there on, we will start seeing a much more better mobilization of growth as well. And then this is all on back of global recession, and that has an impact of India growth as well. See, the last thing on this, what I would want to highlight is inflation still remains the biggest elephant in the room, and that has a direct impact on interest rates as well. And therefore, India has been seeing lot of domestic consumption as against only relying on the foreign consumption, and therefore India may see lesser impact, but there will be some impact for sure.
Yeah, and anyway, we have the US Fed meet this evening in the US, so that
Yeah,
the whole world is watching very closely as to what is their guidance going forward in terms of interest rates. And we have the
yeah,
RBI meet on 6th to 8th, so they
yeah,
from there also we'll get some guidance about the roadmap going ahead. Right now,
absolutely correct.
so capital expenditure, as we discussed, has grown quite sharply, quite nicely. Uh, and this time again, the rise has been quite phenomenal, from 7.3 lakh crores to 10 lakh crores. If you compare it with, say, 2017-18, it was just 2.6 lakh crores. So we are 4 times in about 6 or 7 years. So which is very encouraging. It
Yeah.
also shows that the private capex is taking a little longer to kickstart. But I think if the government persists with this, then maybe at some point we will see both of them starting to rise.
Absolutely. So that's where I would actually want to add that the center is taking the whole of heavy lifting and trying to make sure that the growth is pushed from the center. Then eventually states will also pick in. In fact, they incentivize that 50-year loan with the conditions for the state to do capital investments. So that's an incentive for states as well. And then eventually one will expect that private sector will pick up more on the capex cycle, which will ride the bandwagon, and then government will not necessarily have to do that heavy lifting. Also, if you see, one point that I would want to make, and that will also kind of relate to stock markets, is the infra push. This essentially, the kind of capex and its investment demonstrates the push in infra. And I would say infra as a sector will see majority of the light in terms of the kind of budget that has been presented, and also what has happened historically. It demonstrate continuous promise in infra sector, which will make sure that we as a country are growing very well infra wise, and infra becomes the backbone of all growth. If you also see kind of the way in which connectivity and the 7 priorities of government, including the last mile connectivity as well, that also demonstrate that we are trying to leverage the whole of the country and not only particular geographies or pockets, and also trying to make it very, very inclusive as a growth. So inclusive is very difficult, but it is very, very sustainable and it is long term. So that these are the kind of green shoots that I would see based on this kind of a rise in capital expenditure, and therefore the infra push that is going to come as a sector. And I am kind of very bullish on the infra sector.
Yeah, so infra focus will also mean that infra sector, the materials used by the infra sector, meaning cement and metals, and the capital goods companies can do well going forward. Roads and bridges allocation has been increased from 1.97 lakhs crores to 2.44 lakh crores. So we'll see a lot of activity in the road building also in the coming year. Now, tax receipts, again, the direct tax and indirect tax, direct tax collections as a percentage of GDP has gone up and stabilized at around 6%. Indirect tax has reduced a little from 5.6 to 5.1%. Overall, we are still at about 11.1% of the GDP. We need to move up the tax to GDP ratio further from here. But that is a gradual process and will happen over the time. Indirect taxes, there are some changes. Direct taxes, as Kunal has covered a lot of them. Industry benefits, MSME has been a focus area again. So if you don't make payments to MSME as per the agreed terms, then those payments will not be allowed to you as a deduction. So this is a fresh provision, which could be irritating for the large businesses, but somehow they will come to terms with it, I think. Startups, there are some extension of benefits. Rupee comes from and rupee goes to. Basically, this is a summary of the pie chart. The fiscal deficit chart.
Kind of mention the 7 priorities that the government and the finance minister has laid down and categorized all the things into those 7 priorities. I believe that is something very, very enriching from a long-term vision perspective, which includes mainly inclusive development, last mile reach, last mile infrastructure and investment, unleashing potential, green growth, youth power, and financial sector. So these 7 have become the focus areas, essentially as a priority, which is going to rule the overall philosophy in which this budget has been presented. And therefore, if you try to consume this as a philosophy and the priority area, we actually see how economy will be driven, how poor will be driven, and how essentially there is a roadmap for everybody who wants to kind of grow. Again, if you see, there was a very small surprise, but millets has been given a big push, and 63,000 agri sectors. There is a plan for computerization and digitization. So those are kind of things which are small details taken up very well. And then many of them, not I'm just giving 1 or 2 examples, but many of them, um, including some of the traditional areas which are anyway required to be focused, like growth and job creation, strengthening macroeconomic stability. So stability has been given some focus, and they have tried to actually achieve it through women empowerment, economic empowerment. They have focused a lot on self-help groups. A lot of push has been given on tourism, and tourism has been taken as a mission essentially to have 50 challenge sites that is to be created. So not only this will kind of reduce our foreign currency outgo in the long run, but also it will bring a lot of foreign currency into the country because there will be tourists that will be coming from outside. So some of these highlights have been actually made the overall budget broad-based also, which is very good from an economic standpoint.
Right. These are the overall highlights of the numbers, the fiscal math. Yeah. So this finishes the presentation now. So overall, I think the budget was not as populist as most of the people had feared. It continues on the path of fiscal consolidation, as even Kunal mentioned about the fiscal deficit numbers and sticking to the path. They also have done minimal changes to the tax proposal, which means that they want stability in the tax regime also. Every year making too many changes also is not productive or efficient way to raise resources. Now, recent macro numbers like the GST collection, core infra numbers, IIP, inflation, etc., show that the Indian economy is on the path of accelerated growth. As far as the market reaction is concerned, we initially rose, the Nifty rose, and then fell post afternoon. Currently, there are 2 or 3 triggers to look forward to in the near term: the US Fed meet outcome, the RBI meet outcome, the corporate results for Q3, whichever are left, balanced ones. There has been a tinge of disappointment as far as the results are concerned. So, in that sense, that may be one of the minor reasons for people taking profits. And now China lately has been receiving a lot of money from FPIs. In January, they raised monies which was more than what they raised in the entire 2022. So after the reopening, the foreigners are again relooking at China as an investment destination, and this means that India, which anyway in terms of valuation was slightly expensive, will see some underperformance in the near term. Could see some underperformance at the cost, and China could benefit in the near term. So, the negative news flow on a particular group in India is also not helping the sentiments. So, net, the brokerages, the economists will go back to the table and work out the fresh FY24 estimates, whether they are macro estimates or corporate earnings estimates or Nifty estimates. And based on that, the investors will take a call as to whether they would like to increase their exposure to the Indian equities at this point of time. Overall, on a broad macro perspective, I think India continues to remain a buy on dips kind of a market. Our story is still alive and kicking. There may be differences in opinion about valuation at a particular point of time, but there is no doubt and there is no dispute about the fact that everyone should remain invested in the Indian story. The proportion of investment from time to time may vary, but overall, I think the bullish tone on Indian markets continues. Yeah. So, any closing comments, Kunal? You have?
No, I think so. What you said is very valid, and essentially, I echo the same thing also from a macroeconomic perspective as well. That this is a market of buy on dips, wherein one has to be very choosy in terms of what one needs to buy, looking at some of the futuristic sectors as well, rather than only traditional sectors, because the budget also has been futuristic. Even our Prime Minister Narendra Modi yesterday kind of tweeted that there are going to be a lot of futuristic areas, and we saw all of that today, including the digitization or the DigiLocker and other some of the small things or data governance policy. And then very well summarized by you that the valuations may vary sooner or larger, as long as you are in the range in which one has to be into investable point, you are in the game, and that's something very important. And I kind of echo the same thoughts that this is the right time, and overall robustness in terms of having next year expectations to grow at one of the highest GDP growth rate of 7% is something which is kind of very, very otherwise unprecedented in these global recessionary times. And then I think so we are in a sweet spot, and finance minister and government has done the best in terms of what they could bring on table by the announcements in this budget.
Now we have a couple of questions. The first is, what are the stocks benefiting out of the budget? We mentioned about the sectors that could benefit, and as far as the stocks are concerned, we still need to look at the fine print, and we will keep coming out with reports where we feel the particular stocks will benefit. So keep watching our research section from time to time. The other question is for Kunal, any housing benefit?
I would want you to kind of speak on banking sector, BFSI more importantly, in terms of budget, financial sector, because that has been one of the top volatile sectors. So if you want to kind of give a broad glimpse on that.
Yeah, so basically within BFSI, I think insurance companies have come under selling pressure today because of those two provisions in the budget. And so they may have overreacted to the provisions. So maybe over the next couple of days, they will bottom out. Whether they will rise, how much they will rise from here, that we will have to go back and see. But that is one sector that we can look at. Apart from that, banks, I think broadly in a growing economy, banking and financial space will keep growing. And BFSI anyway is a high beta sector. So if you see Nifty rising or the markets rising, then banks typically more than participate in the upside, and the same way on the vice versa. So it's more a call on the market. Of course, in the current scheme of things, the competition in the BFSI space has risen. It's not like in the previous few years back that we have very few players. So, but even then we have select players who are doing very well and who are available at decent valuations.
No, and I
Now
think
one
credit growth uptake also what has been announced by Finance Minister as a continued credit growth and the related budget allocations for that also demonstrates that the banking sector will do well.
right. One question is any housing benefit interest and principal in the new tax regime? Is there any change? No. In new tax regime, you don't get any deductions, right?
Yeah, so that's correct. We don't, there is nothing new that has been announced today. What has been
There's no
continuing,
change.
yeah, there is no change, but there is a 75,000 crores of allocation for affordable housing. So that is something that kind of is there. But there has been an increase in overall limit in deductions. So that has gone to 3 lakh rupees every individual. And maybe we can watch out for fine prints tomorrow in case there is anything specific on benefit in interest. Also, there was a mention for salaried class that there is some amount of more standard deduction that is possible. So that is also something to watch out for in the fine print.
Okay. Now, one question is about general insurance sector. Why are general insurance sector making losses? Now, we don't have an active coverage on general insurance space, but I think it largely depends on the kind of risk that they undertake and the premiums that they collect. So, agri space is one space which is volatile. Apart from that, motor insurance business also keeps throwing negative surprises to them. So we are basically an underinsured country. So unless the insurance penetration from the general insurance side increases, we don't see a very big scope in the profitability of general insurance companies. Then, is there any change in short-term and long-term capital gain? Kunal, no changes, right?
No changes. So that is one of the good things that
Right.
how market welcomed it. No changes. Only we
Any
got that limit
reflections
of long-term capital gain. That's
on?
it. Of 10 crore or at a higher rate limit. That's it. But no change in the rates.
In the new regime, I think there is no scope for ATC or ATTT. Please confirm.
Yeah, I think so. They have given it open-ended, so one can actually avail the overall deductions. Uh, there is nothing as such otherwise specific, but obviously there are investments and ETC deductions which are definitely available.
Okay. And any reflection on pension schemes like NPS from the budget? There is no change on that, right? NPS part.
NPS, there was no announcement. We'll still have to look in the fine prints if there is any specific announcement.
Right. So I think we have tackled most of the questions. So thank you all for joining this webinar, and we hope that we have been able to be of some use in terms of our views, and you would have benefited out of it. Thank you, Kunal.
Yeah, thank you very much. I hope we have been able to kind of give a glimpse of what budget has been presented today and the impacts thereof.
Okay. Right.
Thank you.